Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today we're diving into a report so complex it might make your head spin, or maybe just mine after reading all that legal jargon. We are covering Corner Growth Acquisition Corp's latest report. It's a wild ride of terminated mergers, executive suite musical chairs, and a clock that's definitely ticking. This company is a blank check company, meaning it formed to find a company to merge with, but the clock is ticking. If it doesn't find a company or is worth less than what the public shareholders invested before a certain date, then that money must be returned. The clock is ticking, so let's see what they have in store. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join. First, what exactly is Corner Growth Acquisition Corp? It is exactly that. I blank check specifically to merge with another company and make it public. Although they can choose almost any company, their priority is technology companies. The most interesting and worrying thing is they haven't got a company to merge with yet. This is where things get interesting. The company initially wanted to merge with someone, Norventic, a company based in the Cayman Islands but was previously known as Softline Holding. But that deal fell through. Both parties decided to end the deal due to unfavorable market conditions and other factors, which basically means a bad environment. Then there was a change in leadership. A company called Ringwood Field LLC replaced Corner Growth Acquisition. With this change, the previous sponsor gave a lot of his shares in the company to Ringwood. The previous management also agreed to cancel millions of private placement warrants. If you're wondering what that all means, I will try to make that more simple later. It has been a rough year for Corner Growth, and to make matters worse, they got kicked off the Nasdaq, which is a major stock exchange. Now they are trading on the OTCQB, which is a lower tier market. This section essentially lays out the plan. They are still trying to do a deal. The initial shareholders agreed not to modify anything about the company from being redeemed in connection with its initial public combination. To continue to do so, they extended the deadline to December of 2025, or else the company must dissolve due to the shareholder agreements. This part talks about how they will face major competition for the mergers, but to make a long story short, the deck is stacked against them. Many businesses are already looking for the same merger partner. They have less time, and it is possible that the target company could be seeking the best deals possible against Corner Growth. In other parts, there were mentions of forward-looking statements that may not be as accurate as they are. Now let's head into Corner Growth's key numbers, the financials. Here is the key: the company's amount in cash has dwindled. According to the filing, as of Dec 31st, 2023, there was 4,554,517, whereas Dec 31, 2024 had only 1,009 on acquiring. The perfect business is $1 wasted for a great deal. However, the numbers also go to show the company is decreasing expenses. Looking here, while a deficit is listed from 2023 at around negative 12 million, went from 6,059,678 as of 2024. This goes to show that they are trying to right the ship. Here's some of the numbers to know if you're a shareholder. For the Class A ordinary stock, almost all are gone, subject to possible redemption at the end. Most of the shares are owned by an entity called Ringwood Field. The previous sponsor retains about a third of the overall ownership. Another interesting turn, a profit. While the company posted a loss of $3.5 million last year, Corner Growth posted a loss of approximately over $300,000, representing a 90% increase. This definitely represents some hope for the company. According to this filing, the company's board must liquidate by December 31, 2025 if a merger has not been identified. With only a year left, there isn't much financial data to analyze because the numbers are clear and set, but the data goes to show they successfully cut down on expenses. There are also plenty of future and previous debt settlements that seem to go the way of the sponsor taking those debts to keep the company clean. At the end of the day, the company is fighting until the end to strike an amazing deal for the company. Now, looking at these results more broadly, Corner Growth is fighting to stay alive. December 31, 2025 is likely now a sword of Damocles as the clock continues to tick. If they are unable to identify a business, time will tick louder and louder, resulting in its ultimate liquidation. A huge risk would be a high expense ratio over time, but given how well executives are with cutting the budget, I see the potential. The biggest opportunity comes down to now. The company is trading at such a low level that its next business will have to be extremely well received for Corner Growth shares to be highly enticing. So right, that's our breakdown of Corner Growth's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.